If you head 30 miles beyond Manhattan to a fortified, windowless data facility in Mahwah, New Jersey, you'll discover the true physical core of American capitalism. It isn't the trading floor of the New York Stock Exchange. It's a server farm. Trillions of dollars, millions of transactions, the vital pulse of the world economy racing at light speed along fiber optic lines buried beneath U.S. ground. For 100 years, virtually all global money eventually passed through America because the country offered the safest, steadiest, most reliable place to hold wealth. Today, those fiber lines are going quiet because capital is moving in the opposite direction. It's heading north. At 4:15 p.m. Eastern on Friday, just 15 minutes after the New York closing bell, the chief executives of America's four biggest banks, J.P. Morgan Chase, Bank of America, Citigroup, and Goldman Sachs, submitted a joint 84-page document to the Securities and Exchange Commission. Buried in dense legal language, the executive summary held one paragraph that exploded the foundations of the American financial empire. The banks declared that, starting at midnight tonight, they are relocating their primary international capital clearing and settlement functions out of New York to Toronto. They are completely sidestepping the United States. They are shifting the infrastructure of worldwide finance to servers in Markham, Ontario, governed by Bank of Canada rules and shielded by Canadian sovereign law. The statement said, to shield our international clients from arbitrary taxation, regulatory unpredictability, and geopolitical meddling, the consortium has created the Northern Clearing Settlement Hub in Toronto, Canada. This change secures the seamless movement of global capital needed to sustain worldwide liquidity. We appreciate Prime Minister Carney and the Bank of Canada for delivering the regulatory stability essential to steady global markets. Arbitrary taxation, regulatory unpredictability, geopolitical meddling. 3 phrases, 3 precise strikes below the waterline of the USS Donald Trump. Wall Street instantly understood the message. It means we cannot handle the planet's money in a nation where the president treats global finance like his private cash machine. It means we cannot preserve the dollar's reserve currency status when the occupant of the Oval Office is deliberately turning it into a weapon against our own customers. Wall Street, the ultimate emblem of American strength, the engine financing the U.S. government, supporting American companies, and extending American influence to every corner of the planet, just examined Donald Trump's America First financial approach and concluded, we can no longer afford to be American. Mark Carney is methodically taking apart America's economic dominance. He isn't using missiles. He's using legislation, banking licenses, and zero-tax transit corridors. He's doing it by acting like the responsible adult while the most powerful person alive torches his own currency. Donald Trump promised that a universal patriot tax on foreign capital would make the rest of the world pay down America's national debt. He insisted that because America is the largest market, global investors had no alternative but to pay his fees. He was playing Monopoly. The banks were playing quantum mechanics. Over the next 45 minutes, I'm going to demonstrate precisely how the United States lost command of global finance. I'll reveal the leaked Federal Reserve memorandum that clearly cautioned the White House this outcome was coming. I'll detail the clandestine late-night discussions between Mark Carney and Wall Street's biggest players that the Treasury Department attempted and failed to stop. I'll clarify why the Federal Reserve Chair is now in full crisis mode and why your mortgage rate is about to rise. You are witnessing the largest financial exodus since the British pound surrendered reserve status in 1944. The designers of American capitalism have concluded that America is no longer secure for capital. Don't look away. Segment 1, the trigger. To grasp why Wall Street just transferred the nerve center of global finance to Canada, you must understand the numbers. Wall Street has no ideology. Wall Street has a legal obligation to mathematics. 4 days ago, Trump happened to the U.S. dollar. He enacted the America First Capital Act, imposing an immediate 2% transaction tax on all foreign capital processed through American financial institutions. The declared purpose: tax the rest of the world to finance domestic tax reductions. Trump stood at a lectern and proclaimed that foreign nations had been using our financial infrastructure for free and now they would contribute their fair share. But Trump fundamentally misjudges what money represents in the 21st century. He views it as something tangible. He pictures gold bars locked in vaults. He assumes Wall Street is stuck in Manhattan because the buildings weigh a lot. Money isn't physical. Money is information. Money flows like liquid, and liquidity rejects drag. Let me explain what a 2% tax does in global finance. Institutional trades aren't evaluated in whole percentages. They're measured in basis points, tiny fractions of a percent. When a Japanese pension fund purchases $1 billion of European bonds cleared through New York, the bank's margin is paper thin. When Trump added a 2% tax, he didn't take 2% of the transaction. He erased the profit margin of the entire worldwide financial apparatus. In one night, clearing a trade in New York became the costliest financial operation anywhere on earth. The banks faced a decision. They could pass the 2% tax to their foreign clients, instantly driving every overseas government and company away from American banks. Or they could relocate the clearing operations beyond U.S. borders. They contacted Mark Carney because Mark Carney isn't merely a prime minister. He previously led the Bank of Canada. He previously led the Bank of England. He literally helped rebuild the global financial architecture after the 2008 collapse. No politician alive knows the mechanics of international capital better than Mark Carney. The conversation wasn't political, it was technical. The banks didn't request a handout. They requested server space and a legal framework. Carney provided sanctuary. Carney launched the Bay Street bypass. He passed emergency legislation conferring sovereign clearing status on the new group. He promised zero transaction taxes on international capital routed through Canadian servers. He promised complete legal protection from U.S. executive actions. He promised that Canadian law would safeguard their capital against arbitrary confiscation. Trump told Wall Street, "Pay me a fee for the honor of operating as American." Carney told Wall Street, "Send your data through Toronto and retain your profits." The choice wasn't sentimental, it was mathematical. The banks computed the Trump friction cost. It would drain $400 billion annually in vanished international revenue. They selected Canada because in global finance, you don't pay extra for an erratic president. You reroute around him. Segment 2, the receipts. We deal in proof here, not anger. Let's examine the concrete evidence showing this was a deliberate, devastating blow to American financial primacy. Receipt 1, the Project Hamilton memo. This is a heavily censored internal document shared among the 4 largest banks 3 weeks earlier, leaked to the Financial Times. It served as the roadmap for today's defection. Titled Jurisdictional Risk and Capital Flight Contingency, it describes the precise chain of events that occurred today. The memo formally labels the United States Treasury Department a Tier 1 unpredictable entity. Consider that. American banks assign their own government the same risk category they apply to emerging market autocracies. The language is stark and final. Given the executive branch's readiness to unilaterally weaponize clearing networks for political leverage, keeping primary global settlement infrastructure on U.S. soil creates an unacceptable systemic risk to our fiduciary responsibilities. Transitioning non-domestic clearing to the Toronto node must conclude before Q3 tax enforcement. Systemic risk. Wall Street just informed its investors that Donald Trump poses a systemic threat to their company's existence. Receipt 2, the Bay Street framework. While Trump bragged about his new tax on Truth Social, Mark Carney quietly guided the International Financial Stability Act through Parliament. This wasn't ordinary banking legislation. It was a custom-built legal stronghold designed for Wall Street. The tax exemption. Canada assured that any foreign capital transiting the Toronto hub, not intended for the Canadian domestic economy, remains 100% tax-exempt indefinitely. The data sovereignty shield. Carney wrote into law that information stored on these Canadian clearing servers cannot be subpoenaed, seized, or frozen by U.S. federal authorities absent a Supreme Court of Canada decision. Trump's Department of Justice has no access. The central bank backstop. The Bank of Canada established a dedicated, unlimited liquidity facility for the consortium, guaranteeing instant trade settlement identical to New York Fed service. Trump tried to erect a toll gate, Carney constructed a toll-free expressway with diplomatic immunity. Receipt 3, the market verdict. The screens never lie. Watch the tape. When the SEC filing landed, U.S. Treasury yields jumped 18 basis points, a huge, abrupt shift in bonds. Why? Because the bond market instantly recognized that foreign investors will stop channeling funds through America. If the money stops arriving, who purchases U.S. debt? Who finances the government? The U.S. dollar index crashed 1.2%. The world no longer needs to hold so many dollars when trades aren't required to clear in New York. Now look north. Canadian bank stocks, RBC, TD, Scotiabank, surged 6%. The Canadian dollar strengthened. The Toronto Stock Exchange reached a record high. Markets are pricing a fundamental shift. Markets are mathematically certifying Toronto as the new hub of international finance. Receipt 4, the Federal Reserve panic. At 5:00 p.m., Jerome Powell reportedly placed an urgent secure call to the White House. According to 2 Fed insiders, Powell delivered a chilling warning. He informed the administration that the 2% capital tax had triggered a structural detachment of the U.S. financial system. The Fed grasps what Trump overlooks. American power doesn't rest solely on its military. It rests on the reality that the entire world must use our banking network. When we sanction a nation, they suffocate because we control the clearinghouses. By taxing those clearinghouses, Trump compelled the banks to construct a new one beyond U.S. jurisdiction. Powell told the White House, "You didn't merely lose tax income. You lost the control board of the global economy." Segment 3, the psychological breakdown. Let me clarify why this departure differs historically from a factory relocation. When a factory relocates to Mexico or Canada, it stings. Jobs vanish. Tax revenue disappears. But another factory can be constructed. When your financial framework relocates, you forfeit your empire. Trump perceives the world through real estate and 1980s protectionist eyes. He sees leverage. He sees tenants he can pressure for more rent. He believes America's massive economy makes global finance a captive market. He assumes Wall Street has no exit. But capital isn't a structure. Capital is fluid. Block a river with a boulder and the water doesn't halt, it simply diverts. Trump positioned himself as the boulder. Mark Carney excavated the new channel. Carney stands as Trump's perfect opposite. Trump depends on bravado, threats, and executive orders scrawled in marker. Carney depends on regulatory design, legal structures, and unmatched command of central banking systems. Carney anticipated Trump's Capital Act months earlier. He recognized that the instant Trump taxed the financial system's plumbing, banks would revolt. So Carney didn't wait passively. He readied the escape route. He cleared regulatory obstacles in advance. He prepared the legislation. He waited for Trump to shove the banks over the edge. And he waited at the bottom with a net and a contract. Trump attempted to blackmail Wall Street. Carney offered them a home. The spreadsheets prevailed because spreadsheets always prevail. In the end, mathematics defeats ego, and competence defeats disorder every time, no exceptions. The chief executives of the 4 largest banks aren't anti-American. They are fiercely patriotic capitalists. But their patriotism stops where existential risk starts. They looked at Donald Trump and saw someone prepared to wreck the U.S. dollar for a news cycle. They looked at Mark Carney and saw someone who knows predictability is the planet's most precious currency. They chose predictability. Segment 4, the consequences for you. Let me connect this straight to your checking account, your mortgage, your retirement savings, your borrowing costs. Because global capital is no longer compelled to pass through New York, demand for U.S. dollars will structurally weaken. When dollar demand falls, its value falls. When the dollar's value falls, inflation climbs. To combat that inflation, the Federal Reserve will have to maintain elevated interest rates far longer. That means your mortgage stays locked at 7% or rises to 8%. Your credit card rate increases. Your car loan becomes harder to afford. You will face higher borrowing costs for the next 10 years simply because Trump pushed global capital out of the country. Your retirement, if you hold a 401k, depends on U.S. financial market dominance. As international money flows through Toronto, U.S. market liquidity will shrink. Thinner liquidity brings greater volatility. It means foreign investors won't automatically buy U.S. stocks by default. the structural advantage U.S. equities enjoyed for half a century because everyone was forced to purchase them is finished. America's national security. This is what frightens the Pentagon most. For 2 decades, America's strongest weapon wasn't an aircraft carrier. It was financial sanctions. When we targeted Iran, Russia, or North Korea, we severed them from New York clearinghouses. We isolated them from the global economy. That power is gone. With the global clearing system now residing in Toronto under Canadian sovereign protection, the U.S. Treasury cannot unilaterally freeze a country's assets. We must request Canada's approval. Let me say it again. The United States of America will now need Mark Carney's permission to sanction its own enemies. We exchanged financial supremacy for a 2% tariff we won't even collect. Segment 5, the domino forecast. Let me outline what follows because moving bank servers is merely the initial fracture. Scenario A, the European pivot. London and Frankfurt are observing closely. The European Central Bank has resented America's dollar weaponization for 10 years. Now that America's 4 biggest banks have created a secure, tax-free clearing hub in Toronto, European banks, Deutsche Bank, Barclays, BNP Paribas, will quickly route North American transactions through Canada. The U.S. financial system becomes isolated. Global finance proceeds without America. Scenario B, the Treasury funding crisis. Within 12 months, the U.S. Treasury tries to sell $2 trillion in fresh debt to keep the government running. Foreign purchasers are absent. They're clearing trades in Toronto, purchasing Canadian bonds, Commonwealth bonds, European debt, cheaper and shielded from U.S. taxes. The U.S. government must sharply raise rates on its own debt to attract buyers, igniting a sovereign debt crisis. Trump's plan to tax the world ends up bankrupting the U.S. government. Scenario C, the new Bretton Woods. Carney uses the Toronto hub to build fresh global financial architecture. He invites the UK, Australia, the EU, and Japan to formalize the Commonwealth European Liquidity Agreement. It supplants the dollar-centric system with a multipolar clearing network run from Ottawa and London. The United States faces a choice: accept the new Canadian-led global rules or wall off its economy entirely with tariffs and capital restrictions. Trump sought to dominate the world's money. He guaranteed that the world's money is now directed by everyone except the United States. Segment 6, the verdict. Let me leave you with one last picture. This evening, as trading ended, a vast shift unfolded in the New Jersey server farms. Technicians from J.P. Morgan and Goldman Sachs physically toggled switches. They redirected algorithmic trading streams. Data traffic on fiber lines from New York to London collapsed. Data traffic on lines from New York to Toronto exploded 4,000%. No moving vans appeared. No crates were carried away. The Wall Street towers look identical tonight to how they looked yesterday. The logos remain atop the skyscrapers. The brass nameplates still gleam, but the structures are now hollow shells. The spirit has departed the body. The trillions that gave those buildings meaning have vanished. They now reside on servers in a technology park near Toronto, directed by algorithms following Canadian law, supervised by a Canadian Prime Minister who knew precisely how to defeat an American president. Not because Canada is naturally stronger than America, but because America under Donald Trump grew too hazardous for its own creators. Trump promised that America First would force the world to kneel before our financial power. Instead, it drove the builders of American capitalism to a nation that still offered the one quality America had lost: stability. The chief executive of a major Wall Street firm, speaking anonymously to the Wall Street Journal this afternoon, was asked why he authorized the move. He didn't mention politics. He didn't mention patriotism. He used 6 words: we go where capital is welcome. We go where capital is welcome. Capital is not welcome in Trump's America. It is taxed. It is threatened. It is held captive to settle political scores. Capital is welcome in Carney's Canada. It is shielded. It is granted a legal structure, a tax-free pathway, and assurance that the regulations won't shift because a president became upset at 3 a.m. The nation that constructed the modern global economy is watching its control panel detached from the wall and carried north by a leader who vowed to make America great again and instead made it untouchable for investment. Close call to action. I want your thoughts. Are the big four banks traitors for shifting global clearing to Canada? Or are they simply fulfilling their fiduciary duty when a government renders normal business impossible? Is Mark Carney designing a new world financial system or merely picking up our dropped passes? And the question every American should fear, if our own banks no longer trust our financial system, why would the rest of the world? Leave it in the comments. I read them all, everyone. This channel has followed the erosion of the American empire live. Mainstream outlets will spend tomorrow arguing over the taxes politics. They'll miss the truth. The money has already left. The switches are flipped. The fiber lines are redirected. Subscribe. Turn on notifications. Share this with anyone who owns a 401k, pays a mortgage, or still believes tariffs are paid by foreigners. Because tomorrow morning, Trump will wake up, watch the dollar falling, and explode in anger. He'll label Jamie Dimon a traitor. He'll threaten Mark Carney. And with every furious post, another $1 billion will silently move north. He isn't battling Carney. He isn't battling Wall Street. He's battling gravity, and gravity always wins. Don't look away.